You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
And they offer me a very good upside. Some of the mining companies that I have invested in might be trading for 5 to 7 times their yearly earnings, and their operations continue to run fine. So those are the companies that I invest in. I'm not so worried about what's happening to the general stock market.
This is Mining Stock Education, and I am your host, Bill Powers. Thank you for tuning in. If you would like to engage the show or topics I cover, feel free to email me at bill@MiningStockEducation.com. I'm speaking today with mining analyst and advisor to institutional investors, Jayant Bhandari. You can find more information about Jayant at his website, JayantBhandari.com. That's spelled JayantBhandari.com, JayantBhandari.com. Jayant, as always, I enjoy speaking with you. It's a very volatile and interesting time in the markets. Worldwide pandemic been declared, and governments are taking extreme actions to deal with it. So the markets are selling off. The economy is being forced to slow down. I'm interested to get your take. What's your perspective on what's occurring now?
Thanks for having me, Bill. Bill, I think when I look at the stock market, I see a hysteria in the market. People are selling whatever they can sell at whatever price a buyer is there for. Buyers have mostly disappeared. A spread has increased between the buys and the sells. This pretty much shows to me that people are extremely, extremely fearful about the future of human society and the future of the economy. Now, I am not discounting the problems that this coronavirus can have on the society, but the fact remains that people have been extremely fearful, and that has meant that valuations in the stock market have become completely corrupted. There's actually no valuation anymore, and you can, if you are courageous enough, and I think this is truly the time when you can make a lot of money, is to invest in the stock market in companies that are actually not even suffering, companies that are producing and working the way they were working earlier. And when the fear goes away, you can expect to make a lot of money from the rebound.
What sectors in particular would you be looking at that would have the companies that you just described?
Mostly the small companies, the junior companies, and they could be in mining. I focus mostly on mining, but they are across the industrial spectrum. You can find small companies that have fallen 50 to 70% for no good reason. And those are the companies that I would be mostly focusing on. But even in general, Bill, the stock market has fallen. The big companies have fallen drastically, and it pays to give some attention to some of these companies and invest rather than sell at this point of time.
Even if you look at potential investments after they've fallen 50 or more percent, and you approach it from the perspective of a value investor, you and I both know that in extreme bear markets, let's take the mining sector, that a lot of these companies that don't yet have cash flow, the pre-revenue developers and explorers, they can actually trade at a discount to cash in the bank. So how do you approach that, Jayant? Because you could buy one of these junior stocks that fell 50, 60% last week, and it could still fall another 30 or 40 or 50% from here.
Well, that did happen to me. I wrote my recommendations about 10 days back, and since then, virtually all those stocks have fallen by about 30 to 50%. Now, that gives me that much extra upside if I invest in those companies. Should I wait for the stock market to bottom? The problem is, Bill, that we can only predict when the stock would have bottomed in retrospect. There's no way for me if today is the bottom of the stock market or it might come 2 weeks from now. So I am happy to invest in these companies whenever I think there's value, there's enough upside for me.
So There are those that are saying run to cash, flee to cash. You would not be of that perspective that you need to sell, cut your losses, and be in cash right now.
Well, I would certainly want to have enough cash to survive on for the next, let's say, 1 year, 6 months to 1 year. But I also understand a lot of people play the margin account. They don't really have enough savings. They speculate in companies that they don't really understand. And for those people, fear overtakes their lifestyle. I don't want to be in that position. I always keep enough cash with me so that I can get a good sleep and I don't have to worry about the next 6 months to 1 year.
Jayant, you told me previously that you lost the majority of your net worth in the last gold bear market. Perhaps you could share with investors that aren't familiar with that aspect of your journey, what happened and what are some key takeaways that might be applicable to today?
Well, I used to play the margin account. I used to put my shares on margin, and I used to borrow money to buy more stocks because I thought I was a genius. I had done extremely well between 2009 and 2011, and I thought this would continue. I would be able to multiply my net worth another 10 or 20 times. And that was a major mistake because with all the margin that I had taken over the next 2 years or 3 years, I had destroyed most of my net worth. I don't play that game anymore. I am almost never in using my margin account. I always have enough cash to survive on for the next 1 year or so.
How would you describe the bids that you currently have placed in today's market?
Every bid that I place today will be lower than the lowest of the share prices over the last 2 weeks. And that is how I'm playing this game. And I might actually even reduce that by 5% or 10%. People will come and sell me those stocks. And that's what I want, because I want to make that extra 10 or 20% that people are eager to offer me by selling their shares at a lower price.
We'll be right back after this word from our sponsor. Arcana Corporation is on the verge of bringing the world's highest grade silver mine into production. The Revenue Virginius mine in Colorado has proven improbable silver reserves grading nearly 37 ounces per ton silver with an all-in sustaining production cost of only US $8 per ounce of silver. The mine is fully permitted with infrastructure already in place, and the company has announced they plan to commence production in 2020. Achieving successful production usually results in a significant upward share price re-rating on the Lassonde curve. Arcana trades under the ticker AUN in Toronto and AUNFF in New York. To learn more, go to arcana.com. That's AURCANA.com. And are you focusing more on the miners that actually have a business? By that I mean they actually have cash flow. Or are you still interested in a lot of the developers and explorers that don't yet have cash flow?
I am investing across the spectrum. I am more interested in the junior non-producing mining companies, but I also invest in a couple of junior mining companies. I also invest in some small companies in Hong Kong and China, and they have fallen significantly. And this has happened despite the fact that those companies are running perfectly fine. So I should get back that the share prices should revert back to what they were before this all started.
Are there any arbitrage opportunities out there that you're currently playing?
Yes, I am. But again, you have to be very careful because the share prices are extremely volatile. So people have to do the arbitrage calculations on a day-to-day basis. There are two companies that I can think of right now. One is Otis Mining, Otis Gold. The ticker is OOO, and it's is being acquired by another Canadian company. And there's another company called Balmoral Resources. The ticker is BAR, and it is also being acquired by another Canadian company. I think it's worth looking at these two companies for an arbitrage opportunity.
And generally, you like to look for about a 20% spread, if I recall from our previous conversations, right?
Well, usually the market offers me anything between 20 to 40% is arbitrage upside. So that's what I look for. Yes.
With the economy contracting due to the forced shutdown of businesses and the normalcy in which society normally operates, what is your outlook for base metals?
Well, usually, Bill, I don't really speculate on commodities, but in a situation like this, when commodity prices have fallen a lot, and expectation of the future of China and East Asia has suffered, I think I am on the optimistic side. I think China will recover. I continue to be extremely optimistic about the future of China and of the future of East Asia. And I think consumption patterns will revert back to normal in a few months' time. Now, that, of course, assumes that nothing too bad goes with the virus situation that we are facing. But if that does happen, then we are going to suffer anyway. So why not I take an opportunity to invest in the market, hoping that it will revert back to normal again in a few months' time.
So you would not take the position, as do some, that the coronavirus was simply the needle that popped this extreme bubble that's going to cause an extended bear market and, debasement of currencies and such.
Oh, that could have happened. So, for example, a lot of stocks have been overpriced. Let's say emerging market stocks have been overpriced, and probably some of the bigger companies in the US have been overpriced. But I am valuing these small companies that I invest in, and they offer me a very good upside. Some of the mining companies that I have invested in might be trading for 5 to 7 times their yearly earnings, and their operations continue to run fine. So those are the companies that I invest in. I'm not so worried about what's happening to the general stock market.
Jayant, as we conclude, what final advice would you like to leave with investors that are listening to us?
Well, I talked about not buying anything on margin, and I think that's something that people should pay attention to. I also like to always have a buy and a sell price for every company that I take an interest in. I don't just buy a stock and sit on it. When I buy something, I also give a sell price to that company. And these are the things that I pay attention to these days. And I also, very importantly, Bill, want to make sure that my capital is protected. I want to make sure that there is a downside support to every stock that I invest in. And that approach has helped me a lot over the last 5 or 6 years.
You've been listening to Jayant Bhandari. He's a private mining investor and a mining analyst and advisor to institutional investors that are looking for guidance of how to invest in the resource sector. Again, Jayant's website is jayantbhandari.com, and you can also find him on Twitter. Jayant, as always, I appreciate your insights. Thanks for coming on today's show.
Thank you very much, Bill.